The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. Let's check out where things are at right now. We got the S&P is pretty flat on the day, up point and a quarter there. We got the Russell is currently down 7 points, NASDAQ up 17, and the Dow up 27. Seems so small after all the massive moves that have recently been happening. All right, what about over in our metals markets? We got copper. Copper's moving down 1.5%. So some pretty nice moves right there. Again, 1.5%. And let's see here. We got natural gas. Actually, let's go back on up to gold. Gold is down about 1%. We got silver down 3%. So this is just to bring up a very strong point. This is one reason why I love being a futures trader. Okay? And you may say, why? Well, because if you're a stock trader, you know what you get to trade? Stocks. And when the market's flat, usually most of the market's pretty flat. There's those opportunities, but as a futures trader, you can trade the metals, you can trade the energies, you can trade the ags, you can trade the indices, you can trade the interest rates, you can trade the FX, you can trade it all. You can see the whole world on one, well, maybe like 4 screens, but you can see the whole world and everything that impacts everything else. And there is always something moving. So, flat stock day, that doesn't have to mean a flat trading day. And, to me, that's really what diversity is. Diversity is not 40 different kinds of stock from blue chips to IPOs, okay? It's having different markets that have different levels of volatility. Sometimes they all are volatile. Sometimes different ones are volatile, but rarely are none volatile. And so you can go in there and you can have a variety of markets you're watching, and when something's just moving for you, you go grab it. We got oil. We got some great moves in oil today. It's been insane in oil today. $3 in movement. $3,000, okay? Big moves right there. Along with silver, we got natural gas. Natural gas down 0.5%. We got corn is down 1%. We got soybeans pretty flat on the day right now. Okay, we go over to pound dollar. It's down 25 pips. Euro dollar is down 56. Euro pound down 26 pips. We got the dollar Franc up 41. Dollar yen is up 17. Euro yen is up 42. And, we got the bonds right now up a little bit. And let's go back over to DX because it's making, 4-year highs? Last time I checked there, let me pull that back up right now, put it on the watch list. And so up right now, 0.38% more today. So just flying over there on the dollar index. All right, well, that gets us caught up, but I highly encourage you, okay, to learn to follow, a variety of markets so you can find those big opportunities on those flat days. And when something's moving, you go with it. How do you know? Watch the volume. Expected volume is your biggest key. It's your biggest clue. Okay? And, there's just so many moves that you can take advantage of if you learn just to, put the right pieces together. And, it was some fast action moving going on this morning. So, I think everybody knows that if you're watching oil. It was flying. And, all that is not even an oil inventory day, right? So, but just, with the news, with everything that's been going on, and, we made a move down to a specific level today. We went right down to a very rarely hit level. And if you don't know what that is, that'd be the 3 deviation mark, okay? Very rare. less than a few percent probability of that happening at all. And I'll open up a chart for you here in a second as we walk through it. And let me just open up a 10-minute for you one as well. And we'll walk through a little oil today. I did quite a few details yesterday. I went into quite a few trades and, a lot of information on that. We talked about oil. So let's see how some of that information turned out on those specific levels. And we'll talk about, where are we going from here on oil. And so with this chart, it's just taking me a second because I want to open up a few different things and just dive into it. Whenever you get a market that moves like this, and it usually doesn't move a few bucks. So, but I mean, it definitely does happen, and you need to have some proper expectations. It's been flying down, and I know some of you are out there, and you're like, man, I wonder if I can catch maybe another $1 or $2 out of that. Or, man, I'm up $3,000. Maybe you just caught it. You are, amazing at trading. And you got the full $3 plus move. And you're trying to decide, what do I do now? Okay? Well, if I go over here and look at this, I got this up on a 10-minute chart. And let me get rid of a couple things. Make this a little cleaner for us. There we go. Okay? I want you to see right here, we went down to a 3 deviation move right there. We went down to a low of 91.02, and our 3-dev move was 91, okay? Let's see if we got even lower than that. 91.11, 91.02. So we got within 2 ticks, and well within the range. As you notice, I put a little bit of a range around them of 1%. So right within that zone, that deviation zone, within 2 ticks of 3 deviations. Again, probability of busting through that is pretty much null, okay? Obviously anything can happen in trading. As soon as you say it could never happen, then you always got to add an except when, okay? But you're pretty done. Now, what do you do if you're in oil? Do you just take your profits? What do you do? Well, part of that is, that's where probability can come into play and help you go, you know what, there's really just nothing here to, make it where it's a great idea to stay in. But, what if it does decide to move a little further? You can play that game if you want to, but you got to figure out a stop, and you got to figure out if it's worth that. Okay, on this trade, I would have already been out. I would have been trailing down. Okay, and I got a couple of lines that I'm looking at specifically, for those of you that follow my specific trading methods. And so, the APX is just adding on. It goes on down, and every time we hit a deviation level, I tighten on up to the predictor arrows right there. So we're tightening on up, boom, another deviation. Okay, now we can just trail it on around, boom, tighten it on up again. We're out. I would be out already, personally. On this trade, I would have been out at, I just want to give you the accurate level. Let's see, let me get my data box up here. Little magnifying glass is a real easy way to pull up any, indicator settings, prices, all that. So if you haven't used that, that's definitely a great feature to always have open. But right here, predictor would have been 91.34. So I'd be out right now, myself, at $91.34. The market's at 91.21 if you're still in. Hoorah for you, but I'd be done. Okay? Looks like we have another apex that is setting up for going short right there. And that's just, it's basically just going in. You got an alert, you got a pivot, you got an entry, you got a confirmation, and profit pop per trade. You're playing right into that 3-dev zone. How much pressure is left? I don't know. Do we really have that much pressure that we can take advantage of going on into this? Let me go in and let me add on some historical information to my volume. So it just takes longer for that chart to load, so that's why I don't default it to it. And let me go up here, and we'll pull up the, if I can find that 10-minute one. Yeah, it's just going to make it take a second while it's loading up. And then we're going to, dissect this oil move step by step for you. Hopefully pick up a couple, good lessons along the way. And so while I'm waiting on that to load, and you may go, why is it taking so long? Well, because I'm pulling up every single tick and for every millisecond, and I'm timing that tick, and I'm timing how far it moved, how much volume happened, and every time it moves, basically 12 ticks or 6 ticks from the low of the last bar, then a new bar is made. There's a lot of math going on in the background. It's not just your average, range level or whatever. Anyways, going on over, looking at this, and so, how do you know? That's the question I get. Well, that's great. Only trade when, there's going to be a trend. But how do you know it's a trending day? Well, let's, again, look at the volume, okay? That's what I really want you to start paying attention to is expected volume. And pay attention to when it, dies off, okay? So we had some massive volume, blowing out expectations. Started up this morning, which is fantastic. Could have just hopped in and been going. And ran on down, and notice, I want you to check this out. This is your big clue. You ought to see something that's really apparent. Notice this big surge right here, and then drop. And then volume just declines. This was the take profit zone, okay? And notice it started at the 1 deviation level, okay? Take profit, 1.5, taking profit, 2, taking profit, 3, final take profit, and that's where it's like pop. And it bounces up like almost, 60, 70 cents. And then a few more people coming in, trying to take it. You're going to have some orders down here. You're going to play down here. And who knows? The thing could go. I don't chart past the 3 deviation level because the probabilities are so minimal, there's really no reason to do it. Okay? Now, I talk about these deviations. What does a 3 deviation move mean in percentages and statistics? So let me show you that. Now, this is an implied deviation, so it's a little bit different than your standard deviation. So if you just go up with standard deviation, you may get a little bit different data than what I use, okay? Mine's more application reality-based than historical-based. But if we go over here, we go down to all the deviations. I talk about each one of them and what they mean. This is inside the scanner area. And 99.7%, it will not break or touch out of this level, meaning there's a 0.3. So 0.3 of 1%, right? 0.3%, it will break out or touch this level. So meaning that's a touching, not expiring. All right, it's extremely rare. Obviously, in October of 2008, we had some of those nice 3 deviation moves, but then the IV moved and it didn't happen anymore because then the IVs went out. So obviously we'd be looking for taking profits, be looking for reversals. As soon as you get any kind of reversal signal, whatever, you could do that. But it's very rare will your charts ever reach these levels. And we're right down there. We still haven't reached it. We're still 2 ticks off technically of the exact price. But I just want to show you how rare that is. When we get back, we'll dive into just analyzing what were what was the diagnostic day trade plan on oil for today. We'll talk about that, okay? Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And so we had, all these moves we were looking at yesterday, and we were talking about, oil and trying to put together that plan on it, and it went really well. Today it went well. It just kept going and going and going. And so let me pull up my oil one for you real quick. We'll talk through it step by step. So we had that triple bottom that we talked about yesterday. And talked about that last week, and we got that nice little recovery. That was just awesome going on in oil. And, it broke above 93.10, 93.20. It beat last week's high. It went on up and hit the profit target we had there at 94.20. We exited our longs for a great profit on that plan, and we went short, right around 94.50. So really a high for the day here was what we were looking for. We got it. It didn't hit all the way up to 94.90 as a high of the day. And we started taking profit on the way back down around the 93.75 range. So that's what started happening today. We figured that would continue on and break on through. Talked about it going down to 93.40 and then down to 93.10. And, really started to tighten up those stops. It's not getting out around, honestly, 92.75, 92.85. Which would have put us right around 1.5 deviations. was looking for a potential long, but there was just no sign to go long at those levels. Okay, and it was just breaking way down. But so for today, the plan that we had going into the day, also we had going shorting again there up at 94.40. Obviously that worked out great, and stop levels being up at 94.90, which we didn't even need that. But we didn't have any targets on the up to the 95.20 level because it never even broke up to go higher. So basically just short all the way down. And I know that's not perfect, but it basically gives you that analysis. And like I said, I'm working on putting these together so we can start having these to you, either first thing in the morning or the night before as a diagnostic day trading plan. So anyways, that gives you a summary on oil. Let me see what else we got that we need to cover right now. And I have this open over here already. So profit poppers, we had quite a few of those over on the Russell. And so let's look at some of those. And that's just going in and, you got your apexes right there, just entering for short, simple, easy trades. Let's see here. What else we got? What else do we have here? We got some, nice, big moves and reversals right here on gold. So gold was just a beautiful move today, right on down, sitting at 1 deviation. Ran on up to settlement after pulling down and then coming on back, down. And like I said, a fantastic move. Hit deviation moves overnight and then pulled on back. I love it when, we get a double deviation hit. And so let me pull that one out for you. Just a live chart right here. Open it on up. There we go. All right, so looking at over here, just at it, we see that last night, basically, gold, oh man, how did I do that? It needs to be an undo button. Anyway, so we pull my deviation levels off and put them back on. There we go. So gold closes at 130 on the pit, keeps going on Globex, closes down a little bit for, a little reset, and then opens right on back up. And as we can see from last night, it ran down, it hit a deviation move, it ran back up, it hit settlement, it ran back down, and hit a deviation move. I mean, that is triple. It's boom, 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 boom. So, okay, well, that looks good. We got the deviation moves. It was right on expectations. Settlement and 1 deviation high to low or 1 deviation period, plus 1, minus 1 being the strongest levels. What was my plan that I had on gold for this one? So let me go through, pull it up. Obviously, we're on the December futures contract there. And we had, let me see, I just want to make sure I got it right. I want to get the right one up that I want to go over with you. This is for, yes, okay. Okay, so on the December futures, we'll cover when we come back, and I'll walk through this plan and how you could have traded this, okay? So stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading trading involves risk and may not be appropriate for all investors.
Diagnostic Trading Hour with Darrell Martin. 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 Diagnostic Trading Hour with Dar
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. So just doing a little gold walkthrough review. We talked about we had immediate resistance at 1220, 1222, topped there at 1223 yesterday, kept at resistance going on today, which was also tied right in pretty close to a settlement point of 1218.8, only a point off of that. So settlement served as a great resistance going into today, trading gold. And for any kind of recovery, that would have had to have been beaten. If it would have been beaten, so these are some things to keep in mind, okay, for if, you know, that resistance area there, 1220, 1222, really needs to be broken through. If we're able to break through and go on up, then where are we going next? 1228, 1229, okay? So I'm giving you some levels for the future right now. Pay attention, okay? And then we got the try small shorts. What about shorts? What can we do on the short side? If we're going on 1220 right there, if we did get all the way up to 1228, 1229, I'd be looking to have a short at 1233, okay? So with a stop at 1233, I'm sorry. So if we got up to 1228, 1229 and took profit tomorrow, okay, or the day after, then I'd be going short there, and I'd be having my stops at 1233. With the move on back down to what was resistance now would be a support at 1220, 1222, right in that range, okay? If it moved on, you know, higher, that'd be great. However, I would expect at that point, starting to use like 1229, 1228 as a support level if I'm going to continue to go long, okay, on up to 1237. So I'm trying to give you an up plan, all right? I'd exit my longs there. I'd look at shorts again at 1240, 1241, and I put stops at 1245. So now you have a plan, okay, to be able to, where to go long and where to do some shorts if gold were to rise higher. So let me go over that one more time for you, try to give you some advanced notice on these. So when I go back and review them, it's not like, well, he's seeing that in hindsight. It's like he's really saying it. Let's go in. December futures have resistance at 1220, 1222. They topped exactly there at 1223, right? We talked about that. That was a double bottom pattern last week that we had a potential recovery for. If it does break on through, we're going to go to 1228, 1229. Okay, so meaning that's a long trade targeting 1228, 1229 if we break through 1223. We could do some shorts right there to see if we get a little pull down because we do have a longer, daily, weekly time frame. We're pretty much sidewards on the short term, and we could try some shorts and just put stops just a few points away at 1233. If it breaks higher, then we could basically look at a move on up to 1237 as a prop target, grab 4 points there, which stops at 1229. Okay, exit your longs there and look for some more shorts at 1240. With your stops up at 1245. You can actually go as high as 1241 for legging in, just right around that area. So that's your trade plan if gold is to break above that 1220, 1223 range. Now, failure to beat that, which is what happened today. We talked about this a little bit. Looking for, heading on back down. We headed back down yesterday to 1213, 1212, as I predicted. We bottomed out at 1214. So where could we go from there? Well, we'd look for a move on down. Obviously, look at there's a lot of sideways, oversold conditions. But this, we're looking for this next lower leg, and we really could be getting this lower leg pretty quick. Okay, so below 1212, that's our September lows at 1209, 1207, which is right around our deviation level. We could, what I'd expect to be the low of the day. And that's pretty much right where we're at. I think we got a little bit lower than what I called was the low of the day. I called the low being 1207. We got down to like 1204 a little bit earlier, and then during the day session here, 1205. But looking at the one deviation level as my low of the day, but right around, like I said, 1207. We broke a little lower than that. But, and so you got some good longs right there you could go in on. But if we do break below that and we continue to move on down, then you'd have your stops right around 1204. So if we're going for a long, so let me look. We got down to, what was our exact low? Now, this is if you're trading early in the morning, 1204.3. So what I was looking for was that move down to 1207 with a buy, okay, with my stops at 1204, which we missed just by a few ticks, fortunately. So that basically, I just want to make sure you understand that that's what the long trade would be. Comes down, hits one deviation, enter at around 1207, okay, and have a stop down at 1204. If it breaks that stop, I'd do it an immediate reverse, and I'd target 1198. Okay, that'd be my next lower target. And beyond that, just playing in between the deviation zones like we've had today. So that's your wrap on gold for the day. Hopping on over to oil. And let's go on into it. We covered oil. I don't know. We got basically just one week trade after another. We got a short, another short, another short, another short, another short, another short. If we wanted to go in and have some fun on the math, let's see. Taking each one of these trades, we'll just take the first, valid full one there from this morning. Then you could have went in and taken that down to here. Yeah, you got that first move, and I'm just taking the ones from like 10 a.m. on. Second move, if I can get them all on one page. Like, where am I going to stick it there? So that's 740, 840. Going down here, another 480. Grab one more. That one's going to be pretty small, like 16. And then, of course, you got your other moves higher, depending on exactly how you're playing them, putting them together. But, plenty of moves on oil there. Some news that we got that we can be aware of. Let me go ahead and open on up our Forex plan. And right here. Okay, so what do we got on the Forex plan? Lots of be aware events on the news. So we went through those. We had iron condors this morning on the dollar CAD. So maybe we'll do a little dollar CAD trade walkthrough today as well. Let's go ahead and let's just talk about dollar CAD. All right. And let me pull up the news plan we had on the dollar CAD. There we go. Oh, man, we got so much news on this list. It's amazing. All right, so dollar CAD, and right here on September 30th, we had CAD various reports. We had, what do we have? We had the GDP, RMPI, and IPPI coming on out. We were looking for an entry at 8 a.m. for a 10 a.m. expiration. Expected some volatility, but net result, we expected it to be pretty flat. So if we zoom in, we did get some definite volatility on that. You can see that explosion that happened right there. But from 8 a.m. to 10 a.m., our net result, a mere 16 pips. We were looking for 20. We only made 4. Not a big profitable trade. Would have been nice to have a bigger trade. But bottom line, we're talking about GDP coming out. We're talking about IPPI, RMPI, all this coming out at once, and we still stayed within the expected movement right there. As far as a high, did we break a little bit above that? Let's see. What was our high up here? We went all the way. We have 31 pips. We did break out of our 20-pip range, but that's the beauty of the iron condors. Okay, 40 pips rule would have been a 1-to-1 on maximum prop potential, and it pulled on back in. And that's what we expect to happen over and over and over again. That's why I like them so much better than straddles or strangles. Not a massive profit, but nevertheless a profit. And so I'll take those. Now, what else do we got for maybe doing back a little bit of analysis here on our dollar CAD? Well, look at where we're sitting at right now. It just doesn't get any better than that. We'll get on over, ran right on up to a 1 deviation move. I'm telling you, if you don't have these deviations, you're missing out, because it's not past movement. It's not standard deviation. It's not floor trader pivots. It's not fib levels. Okay? It's not even magnet pricing, even though they are magnetic. It's the market's expectations of where the market's going to go. I'm pulling the IV out of the options markets. I'm factoring that into a formula I was given a long time ago by one of my mentors, and he showed me how to do this. For a totally different strategy, I got the idea of what if I made levels for day trading out of it. He wasn't even using it for day trading. And it's literally the market telling us where the market's going to go. The market is always right. Okay, and you go, well, when it's wrong, it's still right, because it's going where it's going to go. That's how far everybody that put money where their mouth is said that the dollar CAD was going to go on the options market. So it went there, and it stopped. And you got to master these levels. They're simple, they're easy, they're printed right there in black and white for you. I cannot make it any easier. And I just, it's that piece that I see over and over again, where people are missing out on the statistical expectation. And I don't mean the historical statistics. I don't have faith in what happened yesterday is going to happen tomorrow. That every disclaimer in the world says that doesn't work. But I do have some faith in something saying, well, what does the market say is going to happen? And that's why I'm so big into these deviations. All right, so let's back out. Let's look at, haven't done a dollar CAD review with you in a while. Let's do a dollar CAD review. Dollar CAD is been in a 3-month bull run. The thing has just been flying. If you weren't aware of that, you've been missing out, okay? 3-month bull run. It has a bull flag, a short-term bear pattern setting on up as we're starting to get into that overbought potential zone. But still, I got bullish on weekly, daily, and short-term time frames, okay? The parameters of this flag are resistance at, we got right up here, we got resistance that we're looking at in several areas, but we're busting on through, and it's going really well. The resistance that we had, now this is as of last night, so let me back up and show you so that way you sort of see a little more context. But we had some support and resistance levels right there around 1110. So we're looking for a breakout of them. Well, we definitely got that break out. And if you're looking at 6C, if you're looking at dollar CAD, let me back on over. Let me back up to we'll look at 6C, because I know we got a lot of futures traders out there. So I want to bring this up. And so that's sort of interesting. Just to, I wanted to. Sorry, that's a side note, but just notice how it's inverted because it's CAD dollar instead of dollar CAD. So if you're a futures trader, just so you're not confused, it's inverted from the spot FX. And I had to bring that up because I got a note from somebody on one of my little chats. It's like, wait a minute, it's not bullish, it's bearish. Well, that's CAD dollars, bearish. Dollar CAD is bullish. All right, so hopping on back over and looking at these levels, we got some nice moves up, and we're looking for that bull trend to keep going. And our target on that was, let's see here, moving on up to 1.1220. But let me go in and go to it. That's basically pretty much where we hit. But so we could have went short at 11.55, 11.60. So right over here, I make these planes up around 10 to midnight. So 11.55, 11.60. Okay, so we got a short trade. And at very tight stops at 11.70, and take that short trade down to probably the first deviation level there at 0.5. But I'd be looking for a break above 11.80. We got that break right here above 11.80, okay, which is going into the 0.5 deviation level on the way up. With that level, we're looking for it to go up to the 12.20, 12.25 area, and we topped out at 12.19. So I'm gonna tick off, okay. 12.20, 12.25, and possibly if it keeps going, my next target is going to be on up to the 12.45, 12.50 level. That's going to be just right around 1.5 deviations, okay? And this is actually an important point. When I'm going for a level, and I'm like, okay, well, you know what? I think it's going to hit, right around, 12.20. Okay, like I'm looking at magnets, and I'm looking at fib levels and golden and Gann ratios and everything else. I'm looking at magnets. I'm like, okay, I think it's going to hit 12, 11, 11.20. And we didn't quite hit it. But what did I have that told me, be careful? Okay, like what level was in my way that said it might not get all the way up there? I mean, we spiked up there a little bit. We got up there to a 12.19. I had my deviation at 12.13. Okay? So that alone is a reason to tighten my stop. And I've talked to y'all before about the 10-minute deviation stop method, where when we go up and we're tightening our stops on 10-minute bars, and it's actually a trading system in and of itself, but it's a very simple method, especially to tie into plans like this, where we just tighten that 10-minute deviation stop methods. If we get up there and the 10-minute bar closes at or above the deviation level in that zone, then we tighten that stop up, okay? And, I see it close down, and, might want to go ahead and tighten it up again unless I want to give it some room. But we're within a few ticks. I don't want to give all of that money back. Okay, but I also don't want to tighten it up just because I'm afraid of giving it back. So I need something on the chart to give me a reason to tighten it up, and something that I can use consistently day after day after day. The deviation levels are that thing. And so if I have a magnet there at 12.20, but I got a deviation level at 12.13, well, then it would only be prudent that if I am targeting 12.20, to, once I hit that deviation level, close at or above it, to tighten my stop on up and protect some of that profit, okay? And I'll tell you what the moves further up from here are if this bull trend keeps going over on dollar CAD. Stay right there. We'll be back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, well, that was our dollar CAD news trade. Let's look at what news trade plans we got coming up. We got one tonight. We got the Aussie retail sales being released at 9:30. That puts us in a 9 to 11 for a $20 minimum profit. Iron Condor buying the lower spread, selling the upper spread over on Nadex. And scrolling on up here, looking at the ADP NFP employment change right there, 8 a.m. to 10 a.m. And that release will come out at 8:15 p.m. Usually not a big move. So this is tomorrow morning. We're looking for a euro-dollar Iron Condor for a $30 minimum take profit. And some people call them short straddles. The problem is they're not really a short straddle because you have a cap on the risk. Whereas a short straddle really doesn't have a cap up or down. And you could call them a butterfly, but just the way that the strikes are built, they're more like a condor. So... but, I mean, they're very similar risk-reward models when you put them side by side. The reason that I don't really call them a condor is simply because we don't have that exercise issue like you have on condors. An actual, I mean, not exercise issue, but the reason I call them a butterfly is you have that exercise issue because really, basically, I look at it not as the strike that's touching the ceiling and floor of the box, but I look at where I sell it. Okay? So where did I sell the upper and where did I buy the lower one? And I look, that is surrounding it versus being right at it. Okay? And that's basically the reason we go for Iron Condor on that. If you look at the risk-reward model, and instead of just using the simple strike method, if you look at the actual price, because it's not like a dollar amount like you have like a normal credit spread, but just the way the spreads are worked out, the way they're priced. And then we also got U.S. ISM manufacturing PMI at 10 a.m. We're looking for a 9 a.m. entry, 11 a.m. expiration on the euro dollar for a minimum profit on the lower spread, upper spread Iron Condor combination on Nadex of $25. We got plenty of be aware events going on. We're going to have the U.S. Chicago PMI, the consumer index, and multiple other events happening over the rest of the day. And let's see, we'll have German retail sales that already got knocked out today. We have the yen has a lot of announcements coming out tonight, 750 to 850. You got the yen taking the manufacturing, the non-manufacturing index coming out at 750 tonight. So just lesson to be aware of those events for when they do pop on up. Also, China's going to have their manufacturing PMI come out at 9 o'clock tonight, so be aware that could definitely have an impact. And China will be going into bank holiday, so basically that comes out, and then they go offline for a little bit. Aussie dollar is going to have its retail sales tonight. We already talked about that one. So, again, that was a $20 profit trade we're looking at on that. And we go into tomorrow. We got the China bank holiday happening as well, continuing on. And we got Euro-Spanish manufacturing happening in the morning at 3:15 to 4:15. We got pound manufacturing PMI at 4:30. And we have the U.S. ADP NFP employment change report. We talked about that one. U.S. ISM, U.S. manufacturing, and New Zealand GDP price index coming out. And then we got weekly oil inventory happening as well. And usually a little over 60 pips in expected movement on the oil inventory report as of late. And let's see if I can I won't even pull it up right now, but that'll wrap up all the news between now and the next show right here on the Diagnostic Trading Hour. Congrats to our people on the leaderboard. We got people knocking it out. Got to love it when it's demo, right? We got people already going in and, making, $25,000, $18,000, $12,000, $9,000, $7,000, $6,600, and $5,000 profit. That's first through 10th right now on the leaderboard. And what I would recommend is don't give up hope. Okay, for those of y'all that are behind, because I've seen those numbers turn upside down in a heartbeat, and that kind of profit's made. A lot of risk is made with it. So just keep trucking along. You'll be surprised how volatile these names are going to get on this list. Check back tomorrow. We'll get the updates from today's trading. Y'all have a great day. We'll be back tomorrow, and another great show coming up for you right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.